All right, in today's video, we're going to talk about how Fundrise has performed in the first half of 2020 based on the pandemic. The pandemic definitely has impacted real estate across the board. There's a lot of commercial tenants that businesses have been closed down for at least a portion of 2020, if not are still currently closed down. And if if the businesses aren't making money, they can't pay their rent, they can't pay their other bills more than likely. So, that's going to impact landlords. Residential real estate has been impacted as well. A lot of individuals have been out of work, either on furlough or permanently laid off from their job, and they're struggling to pay their rent as well. There's been a number of regulations put in place where landlords aren't able to evict tenants in certain locales. So, there's a lot of headwinds there and things that are having impacts on the real estate market. Fundrise is no different. Fundrise has tried to take a number of things into account based on the pandemic. And one of the big things is they're trying to have a long-term view. They've reduced payouts to Fundrise investors, trying to conserve capital. And that conservation of capital will do two things, right? Fundrise may have additional expenses related to pandemic costs, and those expenses, they'll need to pay those, right? So by retaining capital, they'll have the funds to do that ideally. Also, there may be a number of landlords that are hurting as part of the pandemic and can't afford to pay their bills and may have to liquidate part of their portfolio. And it's perfect for Fundrise to swoop in and get some deals. So by Fundrise raising the capital, they're taking a long-term view. In my opinion, they're doing the right thing by their shareholders by not, trying to do things in the short term, and that may potentially be a negative in the long term. As I say, always with investing, play the long game, don't worry about the short game. So let's go into Fundrise and take a look at how my portfolio has performed. All right, so here's all the different positions in my Fundrise portfolio. Nothing really to see here that much, but let's see if we can go to the total return section here, performance. All right, so year to date, we'll get the bottom line numbers. So if we look historically, we'll blow it up here. So in 2017, I had a 3.5% return. Now, I was only invested for part of the year. That's when I first opened my Fundrise account. So that's expected. 2018, I had a 10.4% return. 2019, I had a 9.8% return. So far in 2020, I have a 2.6% return. Now, what I've noticed is the first half of the year, the returns are a little lower for Fundrise, and then you usually see a jump towards the end of the year. So 2.6% isn't bad for the first half of the year, given the pandemic situation we've all experienced so far. Now, generally speaking, I think overall returns, I think it would be a stretch to hit this 9.8 or 10.4% like I've saw historically. I'm thinking it'll probably end up somewhere around 5 to 6% total return, which, given what's going on, in my opinion, that isn't very bad. Now, all time, given this somewhat depressed return year so far, I'm still at 8.4%, which is solid for real estate in my opinion. Now, let's take a look over here. If we go back to the overview section, scroll down, Fundrise has an article here, and I'm not going to go through the whole article, but I wanted to highlight a few pieces here that I think are important. Now, obviously, they're highlighting the pandemic here. Their total platform portfolio is 2.41%. So my balanced portfolio within Fundrise is pretty much right in line with this number here. In the first half of 2020, public REITs, so this is VNQ, Vanguard Real Estate ETF, that was down roughly about 15%. Now, lately it's been inching back up, so it's a little bit less than 15% down now. But still, as you can see, Fundrise has significantly outperformed VNQ. So it's definitely not an apples to apples comparison. They're different, even though they're both REITs, they're different. But still, it's good to see that they're both involved real estate. So it's good to see Fundrise definitely significantly outperforming VNQ. From the stock market perspective, The Vanguard Total Stock Market ETF, VTI, is down 4.91% at the time when this article was published. So it's definitely pretty well beating the overall stock market. So why is this? Fundrise is, they, like I said, they take a long-term view. They definitely are a value investor when it comes to real estate. So their whole goal is to make investments in real estate that are undervalued, improve those properties, or change the use of those properties, or do something that is going to impact the long-term value and add value right away in the short term, but also add value in the long term if they want to hold the property or even if they want to sell the property. So this is good to see. I think it is consistent with what Fundrise has been communicating all along. It's also, what I would like to see from their investment, taking into consideration what type of platform Fundrise is. They talk about, their stability, which I would agree with. Overall, Fundrise is a very stable platform. There's not big swings and highs and lows. Overall, it kind of operates within that, 2 or 3% to around tops out at 10 or 11% total return. So it's kind of operating in that zone, and I think overall that's fairly stable compared to funds like VNQ, which tend to have wider swings. All right, so let's switch back over here to the camera. All right, so looking at Fundrise, I don't think there's anything out of the ordinary here. I'm continuing to add to my account. Matter of fact, I just added another $200 today to my Fundrise account. Overall, I like what Fundrise is doing. I like how they keep their investors updated. I really like the platform. It's easy to use. So, I'm going to continue investing in Fundrise. It's not my main investment, but it's a small percentage of my portfolio that I like having in some type of real estate investment. I hope you guys enjoyed this video. Make sure if you have any questions, post down below. And don't forget to like and subscribe to the channel. I enjoy making these videos. Definitely not doing this for any reason other than my enjoyment of chatting about investments, personal finance, and such. So I hope you guys are getting something out of it.